As far as Russia and China are concerned, they now need to protect their currencies from an impending collapse of the fiat currency system, of the dollar-based fiat currency system. And I think that's where we are. And I think that this is why this BRICS meeting in Kazan is actually so important.
You're watching Silver News Daily. Subscribe for more.
Imagine waking up to find silver prices skyrocketing as global powers make a monumental shift. Alas, Derek McLeod says this isn't just a possibility. It's happening soon. The BRICS nations are moving fast to back their currency with precious metals. And if you're not paying attention, you could miss out on one of the biggest investment opportunities of our lifetime. Stay with us as we dive into how this massive shift could send silver soaring to new heights.
We've also got the Middle East, which is really very, very concerning. And when you look at the backing for Israel and look at the backing or the relationship between Russia and Iran, this is effectively, it's looking like another proxy war against Russia. When you look through the parties who are going to get hurt in this. And of course, this is all happening ahead of the BRICS meeting in Kazan. There are, I think, two main things which are of interest to us. The one is how many new countries are going to join BRICS or will be, if you like, slated to join BRICS. I think that the Russians' idea is that in terms of voting, because to put something on the summit agenda requires unanimous approval from all BRICS members. I think that the Russian approach to this is to have what they call partner countries, which you and I would probably call associated nations. And that way, they can have the benefits, if you like, of BRICS membership without having a veto on, what goes on the agenda and so on and so forth. So I think we could see quite a lot of countries joining. I think back in June, end of June, Russia asked all the members of the BRICS to nominate, the 10 countries they thought would benefit most, or they would like to see to join BRICS as a result of the Kazan summit. So I don't know how that's changed. I mean, since then we've seen up to 40 or maybe slightly more than 40 countries interested in joining BRICS, expressed an interest in joining BRICS. And the last one I heard was Cuba. I mean, that's right on your doorstep. There are twice as many other countries on the sidelines watching the situation. And I think we have to appreciate that this is actually very difficult for countries potentially joining because a lot of them owe dollars. They, in the past, they have seen that if they don't exactly toe the American line, the cost of their debt goes shooting up, like interest rates go shooting up, a pump and dump, as it were, as the Chinese put it, actually. And on top of that, of course, the Americans quite happily arrange for regime change. I mean, that's the way they keep the world in order, as it were. So this is really something which everybody's very much aware of. And then you've got trade interests, India in particular.
In August 2023, BRICS, a group consisting of Brazil, Russia, India, China, and South Africa, made headlines by expanding its membership for the first time in over a decade. The group welcomed new members, including Egypt, Iran, Saudi Arabia, and the United Arab Emirates, transforming into what is now informally called BRICS Plus. This move was not just about adding economic weight. It was a strategic step towards reshaping the global financial order. With this expansion, BRICS now controls around 37.3% of the world's GDP, representing an unprecedented coalition of emerging markets. But why is this important? The answer lies in their long-term objective: to create an alternative to the dominance of the U.S. dollar. By increasing their collective influence, BRICS Plus is positioning itself as a powerful force capable of challenging Western-led financial institutions. This expansion is setting the stage for a seismic shift. As these countries come together, they strengthen their bargaining power and create a platform that might be used to launch a new currency, backed by precious metals like silver and gold. It's not just about economic clout, it's about changing the rules of the game. Could this be the beginning of a financial revolution that sends silver prices soaring? Stick around as we uncover how these developments tie into the bigger picture.
Particular does substantial trade with, if you like, the Western nations as well as with Asian nations and China. So you've got all these sort of interests which have got to be balanced, and you have members who will not want to upset the status quo as such. But I think it's changing. I mean, to have this sort of momentum building up, I think, if I was a president or a prime minister of a country in Africa, for example, I'd feel slightly more secure given the numbers who are now trying to join BRICS. So that means it's less likely that I would be targeted, if you like, by, American sanctions, regime change, whatever. So I think that's a very, very important point. So that from America's point of view, the momentum is going away from America in terms of its hegemony over the world. And this becomes a bit of an open question as to whether they might try and do something about it before the BRICS meeting. On that, we just don't know. But the other issue, of course, at the BRICS meeting will be the one which got aired in Johannesburg, but never actually made the agenda, and that was the Russians' proposal to establish a new trade settlement currency to replace the dollar. And if you're going to replace the dollar, then you've got to have something better than the dollar. And so, the thought was that this new trade settlement currency would be somehow backed by gold. There's been a lot of talk about that ever since. And a lot of it, I think, has been very, very misleading. I mean, you see proposals there was a proposal for something called the unit, for example. And that was actually, it was put together by a Russian and a Chinese guy. And you sort of think that these are appointees by, Russia and China. No, they weren't. They're fund managers who sort of came up with this idea of a unit. But it was quite clear from their structure that they don't understand credit. There was absolutely no mention of credit in the new unit. And the other thing is that they try and make it sort of ultra complicated by talking about introducing CBDCs and digitalization and, all Uncle Tom, blockchain and, the whole sort of thing. I mean, the answer with something like this is just keep the damn thing simple. And that, I think, is actually what's likely to happen. Now,
BRICS is not just expanding its membership. It's fundamentally rethinking its role in the global economy. And one of its most ambitious goals is the de-dollarization of international trade. For decades, the U.S. dollar has been the world's dominant reserve currency, and it has held immense power over global markets. However, BRICS nations are now making calculated moves to reduce their dependence on the dollar, and their motivations are clear. Sanctions against Russia and rising tensions with China have underscored the risks associated with dollar reliance. Russian President Vladimir Putin has openly declared that the objective, irreversible process of de-dollarization is underway. The expanded BRICS group, which now includes major economies like Saudi Arabia and the UAE, is exploring ways to increase the use of their own national currencies in global trade. But that's just the start. The ultimate goal? To develop a common BRICS currency that could rival the dollar's dominance. This currency wouldn't just be a symbol of independence from the Western financial system. It would be backed by precious metals, including silver. This move would not only create a stable financial system for these emerging economies, but also increase demand for silver and gold shifting the power dynamics in global markets. But is such a shift really possible? And what would it mean for the U.S. dollar's supremacy? Could this be the tipping point that sends silver prices soaring as the BRICS nations build their alternative economic system? Keep watching as we explore the strategies behind this de-dollarization movement and its massive implications for the precious metals market.
Interestingly, Pepe Escobar, who is very well informed, wrote an article for a Russian think tank where there was this sort of throwaway line at the end, which basically said that the idea that some sort of ruble and yuan and gold currency, will bring back sound money to replace the dollar. And that is where the conversation is now going. And I think that does make sense. It's interesting that this was for a Russian think tank, which is apparently quite close, is regarded by the US Treasury, actually, which has put it on the sanctions list, to be mouthpiece for the government, or very, very close to the government. So I think what Pepe Escobar was saying was, in effect, not being denied, if you like, by the establishment not too far away from President Putin. So that is interesting. And I think the other beauty about this is that the idea that, sort of a basket of currencies backed by gold, which is complete nonsense, gets thrown out of the window. Instead, the sensible strategy is to say, well, look, here is this new trade settlement currency. It's backed by gold. You can convert it into gold if you want, etc., etc. Use it if you wish. It's up to consenting parties. That's the way forward. And I think that's probably what China and Russia understand. But the other thing that comes out of this, I think, is very important. And that is that while Russia clearly sees the benefits of putting the ruble onto a gold standard, not least to show the contrast, if you like, between the ruble and a fiat dollar, but it would appear that China is moving in that direction as well. Now, why would this be? I think, firstly, because America is getting very belligerent, not just in the Middle East, and also, of course, in the Pacific. So this is something which the Chinese do recognize is becoming a problem. It's becoming a threat, if you like, to both Russia and China and their mutual plans. It's a threat which they can either ignore, or alternatively, quite frankly, I think America is taking on too much. I mean, I don't think they'd win against Russia. I don't think that they would ever manage to break up Russia, which, has been the stated objective for some considerable time. So I think America is on a losing wicket, not only in the Ukraine, but I think also in the Middle East. And the unfortunate thing, of course, that Israel gets sacrificed sacrifice. Israel is bust, and is having to fight for its very survival. It needs America there to help it. I don't think the America's going to win against this one. And if I'm right in that, then you could say that as far as the alliance between Russia and China is concerned.
As BRICS accelerates its plans to challenge the dominance of the U.S. dollar, precious metals have emerged as the cornerstone of their strategy. Unlike fiat currencies, which are vulnerable to inflation and geopolitical risks, gold and silver have maintained their value over centuries. The BRICS nations understand this and are laying the groundwork for a more stable economic system by using these metals as the backbone of their new currency framework. The logic is straightforward. To attract global partners and stabilize their economies, BRICS needs a currency that isn't just another fiat competitor, but one backed by tangible assets. Gold, traditionally seen as the ultimate store of value, is an obvious choice, However, silver plays a critical role as well. Often referred to as the poor man's gold, silver is not only a precious metal but also an industrial one, making it highly versatile and in demand. The growing interest in silver isn't just theoretical. Central banks, particularly in Russia and China, have been accumulating gold and silver reserves for years, anticipating a move like this. By backing their new currency with precious metals, the BRICS nations are looking to create a system that can withstand the volatility and risks associated with global fiat currencies. This shift could drastically increase the demand for silver as a monetary and industrial asset, positioning it as a key player in this new economic order. But what happens when the world's largest emerging economies start stockpiling silver and using it as the foundation of their financial system? Could this be the catalyst that propels silver prices to new heights, giving it a vital role alongside gold in the global market? Stay with us as we delve into how this strategic move might reshape the landscape of precious metals and spark a rally in silver like never before.
They don't need to do anything. That's been Chinese policy. Just stand back, let America make all the mistakes. And it's been a winning policy. So why not continue? But this is something which has probably run its course because of the debt situation in America. The fact that the two largest foreign buyers of US Treasury debt are now net sellers, as Japan and China, for different reasons. The fact that America is now in a debt trap. This is a point which is recognized by multiple central banks who've been selling dollars. They've been adjusting their currency reserves, if you like, dumping dollars, even dumping euros in return for gold. What does that tell you? They're going into gold, they're getting out of fiat. These are alarm bells, which we, which we ignore. We sort of just think, well, gold's going up. Okay, central banks are buying it. We don't know why they're buying it, but they seem to be buying it. The idea that they want to hold on to pet rocks, well, doesn't make any sense. But it does make huge sense if you understand the difference between fiat money, which is credit unattached to any value whatsoever, depending entirely on the faith in it, initially by foreigners and then eventually by the domestic users of that currency, compared with real legal money, which is internationally accepted, which is gold. So this is actually a very, very serious point we've arrived at. But getting back to the situation as far as Russia and China are concerned, they now need to protect their currencies from an impending collapse of the fiat currency system, of the dollar-based fiat currency system. And I think that's where we are. And I think that this is why this BRICS meeting in Kazan is actually so important. If Russia and China don't act soon, and this seems to me to be a pretty good opportunity, if you like, have a facility, if you like, for trade settlement and the purchase of commodities, being priced effectively in gold through rubles and through yuan. If you have that, then this is a Trojan horse, if you like, into the destruction, the ending of this fiat currency regime, which is serving nobody any good at all. Just look what's happened to the purchasing power of our currencies, since 1971. I mean, they've diminished to less than 1% of what they were then. This has done none of us any good at all. It's just allowed the political class to spend way above their resources. For what benefit? Impoverishing us all in the process. And we are actually coming towards an end of that. So from the point of view of Russia and China, I think quite clearly, this could be the moment when they have to take the decision. Are we going for it or not? It's their call. So Kazan, I think, is desperately.
Alastair MacLeod, a renowned expert on precious metals, has been vocal about the massive rally he anticipates for silver. According to MacLeod, The BRICS nations' move towards a precious metal-backed currency could be the spark that ignites a dramatic increase in silver prices. But why silver? Specifically, McLeod emphasizes that silver is currently undervalued and has been trading at a suppressed price relative to its true potential. As the BRICS nations work to stabilize their economies and reduce dependence on the US dollar, they're turning to tangible assets like gold and, crucially, silver. Silver's dual role as both a monetary and industrial metal makes it an attractive asset for these emerging economies. It's not only a store of value, but also a critical component in various technologies, from electronics to renewable energy, industries that are expanding rapidly across BRICS countries. McLeod's analysis suggests that if BRICS backs their new currency with gold and silver, it would create a global rush for these metals. The increase in demand, coupled with limited supply and mining constraints, could push silver prices to unprecedented levels. Historical data also supports McLeod's view. Previous monetary shifts involving precious metals have led to significant price surges. With the BRICS bloc holding substantial economic influence, this move could be the tipping point for a silver rally. Is silver, often seen as the poor man's gold, about to become a premium asset as BRICS reshapes the financial world? And how high could prices climb if McLeod's predictions come true? Keep watching as we explore the technical data and historical trends that back his bold forecasts.
Anyway, we're getting off topic. All I'm saying is that this is a common problem, and it's not just confined to Americans, who are notoriously sort of inward-looking. I mean, there's no world beyond America for the vast majority of Americans because they don't travel. I think statistics say that something, 15-20% of Americans have a passport. The rest don't. But, this is shared with everyone. But as to your question, the dangers of a fiat currency collapse are that really what we're talking about is a loss of purchasing power for the fiat currencies. Now, that means that the purchasing power of your dollar goes down. The way in which this usually works, or has worked in the past, and I see no reason why it shouldn't be different now, is that the run on the currency starts with foreign owners bailing out. And so we are already seeing, as I said earlier, we're already seeing China and Japan turning net sellers of US treasuries and net sellers of the dollar. And that is something that is likely to increase. The fact, as I said, that central banks around the world are selling fiat currencies, particularly the dollar, which is, the king rat of fiat currencies, in return for real money, which is gold, also confirms this trend that the foreigners basically are getting rid of dollars and going into real money. There will come a point where there is a wider awakening of the problems which are leading to a collapse in the purchasing power of the dollar. We saw a start of this with the Fed cutting interest rates by 50 basis points, in September, when 25 basis points was expected. Now, what's called point difference between friends? It's not that material, but in terms of indicating.
Let's take a closer look at the technical side of the silver market. Currently, silver zag/ust is showing signs of a bullish trend, trading within an upward channel. As of today, silver is priced at $31.72, and the technical indicators suggest a potential for further growth. Moving averages indicate strong buying pressure, as prices have broken through key resistance levels, showing clear momentum on the upside. However, technical analysis also points to a possible short-term bearish correction, with a support level around $31.60. A test of this support could lead to a rebound, propelling silver prices higher. The bullish outlook remains intact as long as the price does not fall below the critical level of $30.65, an area that, if broken, could shift the trend to a downward move with targets as low as $27.85. On the flip side, a successful bounce from this support zone could push silver prices above $33.45, aligning with the last Air McLeod's prediction of a significant rally. What's interesting is that the technical signals are not just about patterns. They tie directly into the larger macroeconomic trends we've discussed. The BRICS nations drive to back their currency with precious metals, and the subsequent global shift away from the dollar could reinforce this bullish trend, pushing prices higher as demand surges. This convergence of technical analysis with global economic shifts indicates that silver may not just hold its value, but potentially soar as these changes unfold. Is this the perfect storm for silver investors? Will the BRICS strategy and technical momentum align to drive silver beyond its current levels? Stay tuned as we connect these patterns to the bigger picture of global finance.
The way the Fed policy is going, it was a very, very strong suggestion that the dilemma that the Fed faces in terms of high interest rates killing the economy or a weaker dollar, they've chosen the weaker dollar route. So again, the foreigners know that this fiat currency's purchasing power is going down. Then we have the problem of how does the US government fund its deficit? I mean, that's already run up to, 35.6 trillion or something. You have got the debt limit being reset on the 2nd and 3rd of January, which is after the presidential election and just before the new president takes office, I think, because I think they take office on the 6th of January or thereabouts. So, if I was Kamala Harris or if I was Donald Trump, I would want to get that ceiling raised as much as possible to give me room to spend, or room, if you like, to sort the economy, or however you like to put it. So how about 40 trillion? And, we could get there quite quickly. So all this is feeding into a crisis for the dollar. Now, when the dollar's purchasing power goes down, interest rates rise, which means that banks and businesses start going bust. The cost of funding, of US Treasury funding, rises materially. And guess what? They're then definitely in a debt trap. So how do they manage this? Well, they've got to rescue the whole caboodle, which basically means they've got to devalue the currency by printing currency to replace contracting back credit. I mean, I'm not quite sure how this is really going to play out, but you can see that this is a situation for which there is no easy solution. And there will come a time when the average American begins to realize that it's not prices going up, but it's the purchasing power of the dollar going down. Now, the great Austrian economist Ludwig von Mises opined that when the users of a currency finally realize that it's the currency going down, then it's at it. That's the end of it. And so the only question remaining is how quickly could this happen? Well, I think it probably depends to an extent on what comes out of Kazan. I mean, if the Russians and the Chinese do back their own currencies, for limited purposes, perhaps initially, like
the BRICS nations' strategic shift to de-dollarize their economies has far-reaching consequences, especially for the dominance of the U.S. dollar in global trade. For decades, the dollar has been the world's reserve currency, making it a critical component of international transactions. Almost 90% of global forex transactions involve the dollar, demonstrating its entrenched role in the financial system. But as BRICS nations expand and strengthen their economic ties, they are actively working to reduce their reliance on the dollar, a move that could reshape the entire global economy. Several factors drive this push for de-dollarization. First, economic sanctions have highlighted the risks associated with dollar dependency. Russia, for instance, has faced sanctions that restricted its access to the international financial system, encouraging it to seek alternatives. The same is true for China, which sees de-dollarization as a way to mitigate the risks posed by U.S. geopolitical strategies. These countries are not alone. Other BRICS members share similar motivations to protect their economic sovereignty. The impact of BRICS nations reducing dollar usage could be enormous as they shift to their local currencies, and potentially a unified BRICS currency backed by precious metals. Global demand for the dollar could decrease significantly. This reduction in demand might lead to a weaker dollar, higher inflation in the U.S., and increased volatility in global markets. Moreover, central banks around the world have already started diversifying their reserves by increasing their holdings in gold and other assets, signaling declining confidence in the dollar. For silver, this decline in dollar dominance could be a game changer. As BRICS moves forward with their plans, the demand for silver as a hedging asset and a component of a precious metal-backed currency could surge. The question is, will this decline in dollar hegemony be the catalyst that propels silver to new heights? What do you think? Could the BRICS initiative be the tipping point that ends the dollar's supremacy? And how might this shift affect global markets and precious metals? Let's dive deeper as we explore the growing momentum behind the dollarization and its implications for silver investors.
Cross-border trade settlement in the Shanghai Cooperation Organization and BRICS, then that could accelerate the decline in the dollar very, very quickly. And once it starts going, the question will be asked increasingly, what's your faith in the US government's management of the dollar? How's it today? How are you seeing it? This is how it will affect ordinary people. And of course, it means that those on fixed income, the elderly in particular, who are living off savings, the unemployed, the poor, they're going to get hit very, very hard by this. The middle classes will find that their wealth is wiped out. Quite a lot of the wealthy people will also really suffer, though generally there is a sweet spot for them, and that is, the rarely wealthy. They manage to find ways out of this, one way or the other. But there will come a point where I think even they're going to have a problem. And because this is going to be everywhere, and I'm not just talking America, I'm talking about the euro, I'm talking about the yen, I'm talking about sterling, even the Swiss franc. There's going to be no hiding from this. You can't just sort of get out into a firm currency or, a proper gold substitute, because where's the gold substitute? I mean, it's only going to be for trade purposes, perhaps, for if you're Russian, Chinese, or in BRICS. So for those of us in the West who would probably be stopped from participating in this anyway, from buying yuan or whatever, on that basis, this is going to be very bad news for everybody. And this is why I tell people, those who are prepared to listen, for goodness sake, get out of credit and get into gold, which is real money, real legal money since Roman times, and it still is.
Russia and China are at the forefront of the BRICS movement to reshape the global financial landscape. Both nations are not only the economic powerhouses within the BRICS alliance, but also the most vocal advocates for de-dollarization and a transition towards a precious metals-backed financial system. Their actions and strategies are pivotal in driving this shift, making them the primary architects of a new economic order that could significantly impact the global silver market. Russia, in response to Western sanctions and isolation from the dollar-based financial system, has been aggressively increasing its gold reserves while reducing its holdings of U.S. treasuries. This move highlights their commitment to backing the ruble with tangible assets, preparing for a future where fiat currencies may face severe devaluation. But Russia isn't just focused on gold. Recently, they've turned their attention to silver as well, viewing it as an essential asset for both its monetary and industrial value. This strategic accumulation signals Russia's belief in the potential of silver to play a key role in a new, stable currency system. China, on the other hand, has been quietly but steadily increasing its gold reserves for years, while establishing swap agreements with BRICS and other allied countries to facilitate trade in local currencies. China's push for the internationalization of the yuan, supported by a foundation of precious metals, is a direct challenge to the dominance of the dollar. The Chinese government understands the need for a secure, dependable alternative to fiat currency, and by collaborating with Russia, they're laying the groundwork for a system where precious metals like gold and silver back financial stability. Both Russia and China recognize that a currency backed by tangible assets, such as gold and silver, could provide a much-needed buffer against the volatility of fiat money, especially as economic tensions rise globally. The question remains, if these two nations successfully implement this strategy, how quickly could other countries follow suit, and what impact would that have on the demand for silver? Could we see a rush to accumulate silver reserves similar to what happened during past monetary shifts? As the BRICS nations' two biggest players align their strategies, the potential for a massive revaluation of silver becomes more likely. Are we witnessing the early stages of a silver revolution, driven by the world's rising powers? Stay with us as we uncover how Russia and China's coordinated efforts could reshape the future of precious metals.
Silver's, people call it the poor man's gold. Silver is a monetary metal, but it's not valued as such. It's valued on industrial grounds, and that value, I have to say, is somewhat suppressed. It has been in supply deficit, according to the Silver Institute, for the last 4 years, which is a crazy situation. I think just purely on commercial fundamentals, I would see silver going quite a lot higher anyway. As gold gets more and more in the forefront of replacing credit, if you like, in people's ideas of value, how do we protect ourselves? Then silver is going to rise even quicker. Bear in mind, silver relative to gold has been in a long-term bear market. I mean, Diocletian's edict of maximum prices put the ratio at 12. If you look at what Sir Isaac Newton was saying, he was saying I think something like 14.5 or 15.5. The big slide really was in about 1870 when Germany, in the wake of the Franco-Prussian War, actually it was a bit later than 70, it was probably about 74, 75, came off the silver standard, having got gold reparations out of France. So they went on to a gold standard. And from that point, really, there was virtually nobody on a silver standard in Europe. And the price fell because it was no longer reflecting its moneyness, if you like. It wasn't a standard except for small amounts. In this country, it's legal tender for 40 shillings, which is £2. But any more than that, it's not legal tender. So this is the sort of problem that silver has faced. The current level of the relationship between gold and silver is a ratio of around about 83, 84 as we speak. That, in my mind, is absolutely crazy. It is far too high, given the circumstances that we're seeing of the early stages of a collapse of fiat currencies.
To understand the potential impact of the BRICS nations' strategy, it's essential to look at historical precedents when similar moves shifted global financial systems and precious metal prices. History shows that whenever major economies transition away from one dominant currency or economic model, precious metals, particularly gold and silver, have played a crucial role. This context helps us appreciate why silver might be on the brink of a significant revaluation. Consider the collapse of the Bretton Woods system in 1971, when President Nixon took the U.S. off the gold standard. This decision marked the end of a system where the dollar was directly convertible to gold, leading to a surge in gold and silver prices as global markets adjusted. Silver skyrocketed in value, reaching an all-time high in the early 1980s. Investors flocked to precious metals as they became safe havens amidst economic uncertainty and currency volatility. A similar scenario could unfold as BRICS nations attempt to back their new currency with precious metals. Another historical example is the post-World War I era in Europe, when countries moved away from the gold standard to manage debt and economic instability. This shift also led to dramatic price increases for precious metals as confidence in fiat currencies wavered. When nations transition their currency systems, the demand for gold and silver typically surges, as these metals are viewed as reliable stores of value. Today, the BRICS nations are building momentum for another such transformation. By exploring the possibility of a gold and silver-backed currency, they are setting the stage for what could be a historic shift in global finance. If they succeed, the resulting demand for silver could mirror past events where precious metals soared in value as economies sought stability. Could this be a replay of the 1970s, with silver positioned for a massive upswing? History suggests that when the global financial system undergoes such fundamental changes, those who position themselves early in precious metals often see significant gains. The BRICS nations are aware of this, and their actions indicate a calculated move to capitalize on silver's potential. Is this the start of a new chapter in silver's history, and could it be one of the most profitable opportunities we've seen in decades? Stick around as we delve into how the BRICS initiative may ignite a rally reminiscent of past financial revolutions.
It is purely mispriced. And I was interested to see that about 4 or 5 days ago, the Russians passed some sort of regulation for their wealth funds that they were going to go out and buy silver. Why is that? I mean, you could be a conspiracy theorist and say they want to bankrupt the Western bullion banking system. But let's assume that's not true. They're buying silver because they see it as an extremely precious metal, and they see it as something which is wildly undervalued relative to gold. So, and I think it's probably an indication of where Russian policy is going on gold, rather than anything necessarily about silver. I mean, Russia is vying for the second largest output by gold mine of gold, vying that position with Australia, China being number one. So she's already got all the gold she needs, and it seems to me it makes an awful lot of sense for her to wander in and start buying silver. Apart from anything else, it is an extremely useful material for industrial purposes, and I don't see that changing. Even if silver runs up to $100 an ounce, I don't see if you like, the qualities of silver being matched by anything else in terms of its applications. So where does it stop? This is bid only to me. It's quite simple. And incidentally, the point I was making in my article about silver is that it's not, it's by no means overbought or anything like that. There are no extreme positions in the futures market. But we do have a situation whereby the swaps, if you like, the bullion bank trading desks are short, and they are being squeezed. And some of these banks are also being squeezed in the gold market, in the gold futures market. So there is the potential for the derivatives markets, if you like, in precious metals to seize up. And that would be catastrophic for us, I must say.
While the BRICS nations are setting the stage for a potential silver rally, the current supply and demand dynamics for silver further amplify this possibility. Over the past few years, silver has experienced a persistent supply deficit, with demand consistently outstripping supply. According to the Silver Institute, the market has faced shortages for 4 consecutive years, highlighting a fundamental imbalance that could drive prices higher as demand continues to grow. On the demand side, silver's unique properties make it essential for both industrial and monetary uses. The rise of technologies such as electric vehicles, EVs, solar panels, and advanced electronics has pushed industrial demand to record levels. Nations within BRICS, like China and India, are among the largest consumers of silver due to their rapidly expanding technology and renewable energy sectors. As these economies continue to grow, their demand for silver is expected to increase even further. On the monetary side, silver's role as a store of value becomes even more critical as the BRICS nations move to back their currency with precious metals. If these nations begin to accumulate silver reserves in addition to gold, it could create a new wave of buying pressure that the current market might struggle to meet. With mining outputs limited and production capacity not scaling fast enough, this surge in demand could lead to a significant supply squeeze, pushing prices higher. Furthermore, central banks have started diversifying their reserves away from fiat currencies like the US dollar and into precious metals, primarily gold. If this trend extends to silver, the existing supply constraints could tighten even further. Russia's recent regulatory moves to allow their wealth funds to accumulate silver is a clear indication of how BRICS nations are already positioning themselves. The combination of increasing industrial demand, BRICS nations' strategic shift, and existing supply limitations paints a bullish picture for silver. With demand potentially skyrocketing and supply struggling to keep up, could silver prices be on the verge of a historic breakout? The stage is set for a potential rally, but how high could silver prices go if these dynamics play out as anticipated? Stick around as we examine the potential price targets for silver in this new financial era.
But I'll try and be as brief as possible on it. The first thing you must forget is this idea that a recession is a fall off in demand for products. Yes, it is. But at the same time, it's not as if products are being manufactured at the same pace as they were before then. This is Say's law, which was turned down by Keynes on spurious grounds in order to make his argument that there's a role for the state to come in there and ensure that demand continues. But the fallacy in all this is that when you get higher unemployment, it is because businesses are shutting down production. So the supply, if you like, also falls. Now, that's part of the story, obviously. It's not the whole story. If you do get, a slump, let's call it a slump. Let's go old-fashioned and call it a slump, which is really what it is. This recession rubbish is meant to confuse us. It's rather like the mainstream media talking about Ukraine. It's a slump. We're going to have a slump. Okay, let's assume we have a slump. Then obviously demand for raw materials to feed production declines. So while the costs of production remain, don't fall that much, probably even go higher. The material cost input into the production chain actually does fall. Fine, we can accept that. This is an argument under sound money because you are assuming that the purchasing power of the currency which you are measuring the value of commodities in remains constant. It doesn't change. This is not the case we have today. The economic conditions that happen with a slump undermine the currency.
As the BRICS nations accelerate their shift toward a precious metals-backed currency and global demand for silver intensifies, the question on everyone's mind is, how high could silver prices go? Analysts and experts, including Alastair MacLeod, have suggested that silver is currently undervalued and poised for a breakout. But to fully understand the potential price targets, we must consider both historical patterns and current market conditions. Historically, when silver markets experience major disruptions tied to economic or geopolitical shifts, prices have surged dramatically. For instance, during the 1970s, when the dollar faced devaluation pressures following the end of the Bretton Woods system, silver prices soared from around $1.50 per ounce to nearly $1.50 per ounce by 1980. This was an increase of over 3,000% within a decade, driven largely by uncertainty in global markets and a rush toward tangible assets. Applying a similar perspective today, if the BRICS nations successfully implement a silver-backed currency, demand could skyrocket, driving prices exponentially higher. Some experts believe that with the current supply deficit and the increasing role of silver in both industrial and monetary uses, prices could potentially reach $50 or even $100 per ounce over the next 2 years. Alastair McLeod points out that the current silver-to-gold ratio, which is around 83-84, indicates that silver is still significantly undervalued. Historically, this ratio has been much lower, at times even reaching 12-15, which suggests there is substantial room for growth. But the real wild card lies in the geopolitical landscape. If the BRICS alliance pushes forward with a silver-backed currency and nations around the world begin stockpiling silver, the resulting rush could drive prices to unprecedented levels. Some estimates suggest that if silver were to fully reflect its value as both an industrial and monetary metal, it could climb beyond $150 per ounce, especially if investors worldwide join the trend and central banks follow suit. However, these price targets hinge on the success of BRICS strategy and the global response. Could we be looking at another silver boom that outpaces historical records, or are we underestimating the market's reaction to such a monumental shift? Is $100 per ounce realistic, or could prices soar even higher if the BRICS plan gains momentum? Stay with us as we conclude this analysis by revealing the apex of this financial transformation and what it means for silver investors in the final step.
Very substantially. And so what you will see is you won't see a fall in the price of silver or copper or whatever. You'll see a fall in the purchasing power of the dollar, which is the principal currency in which we trade all these things in. You'll see the fall in the value, if you like, of measured by the dollar, a fall in the value of the dollar, if you like, measured in terms of commodities, which will be faster than any fall in real terms of the value of the commodities themselves. It's quite simple. I mean, it's amazing that modern economists, macroeconomic theory, and all this sort of stuff, they turn their back on classical economics, but they don't turn their backs on some of the lessons. They're very, very selective about it. What they like to do is to say that, let's look, for example, at money supply in the Depression. Money supply contracted by something like 40%. Okay, that was a major contraction. And at the same time, the purchasing power measured in goods and services by gold or by the dollar, which was on a gold standard, rose. So, this was, you put 2 and 2 together and get 5. You sort of think, hold on, what's driving prices up is a contraction in credit. No, it wasn't actually. Basically, the reason that credit contracted was because some 6,000 banks went bust. In other words, the credit was evaporating completely, along with the other side, the obligations, if you like, to pay it. Because if the bank goes bust, it's not going to honor the deposits. That's really what happened. And we saw that the conditions which Roosevelt decided, needed to, the way to deal with this was to devalue the dollar, which he did in 2 stages. He first of all called in any gold certificates, as it were, and any gold held by individuals. And I understand from my colleague James Turk, who has researched all this pretty much over the years, that it was only the banks who actually...
The BRICS nations' shift towards a precious metals-backed currency could be a transformative event that fundamentally alters the global financial landscape. At the apex of this story is silver, a metal that, if the predictions and strategies come to fruition, might experience a rally unlike any we've seen in modern history. The culmination of global economic forces, supply constraints, and the strategic plans of BRICS nations point towards one possible outcome, a massive revaluation of silver. With BRICS aiming to create a currency backed by precious metals, silver will play a crucial role, not only as an industrial metal, but as a cornerstone of their financial system. The growing stockpiles by nations like Russia and China signal that they are preparing for a world where silver's value aligns more closely with its historical and intrinsic worth. If the BRICS alliance succeeds in implementing their currency system, this could trigger a domino effect. Countries currently outside BRICS might also begin to accumulate silver as they seek alternatives to the US dollar. Central banks globally could start diversifying into silver, following the example of BRICS nations, thereby pushing prices higher. The result? Silver could rise to levels beyond $100 per ounce, with some analysts even projecting targets of $150 or more. However, this transformation is not without its risks. If BRICS fails to establish a functioning precious metals-backed currency, or if geopolitical tensions escalate, the global economy could face severe volatility. In such a scenario, silver would still likely be a safe haven asset, but the rally might be less dramatic. On the other hand, if BRICS achieves its goal, it could set off a global scramble for silver, leading to a paradigm shift where the metal becomes a central player in international finance. For investors, the message is clear. Silver is positioned as a strategic asset in the midst of this transformation. The potential for gains is immense, but it's crucial to stay informed and be prepared for the evolving geopolitical landscape. Could silver become the ultimate beneficiary of the world's shift away from fiat currencies and the dollar's dominance? As we conclude, remember that while the future for silver looks promising, it's vital to approach such investments with caution. The dynamics at play are complex, and while opportunities abound, so do the risks. Stay ahead of the curve, and don't forget to subscribe to our channel for the latest updates on this historic financial shift. This is not financial or investment advice, but rather an analysis of potential opportunities and the factors shaping the future of precious metals.
You submitted gold. So if you got your money, if you got your gold coins in a bank, I mean, get it out quick. Put it somewhere else. The banking system will not be your friend in this sort of situation. And then, of course, he devalued the dollar from, if you measure it in terms of per ounce of gold, from 20.67 down to 35. It was a 40% devaluation, just like that. In other words, you were robbed. You American citizens were robbed by your government. That was the solution to the thing. But it wasn't a solution because the Depression continued right until World War II, when you finally joined in the European war, fortunately on our side. So it was not a solution at all. If anything, it prolonged the Depression. So, but getting back to the value of the dollar under these circumstances, I cannot see how anything can happen to the dollar other than its collapse. What could the government do to stop it? Well, first of all, they would have to cut government spending hugely. And the Keynesians would say you can't possibly do that in a slump. We're now calling it a slump. So, I mean, we're in a mess. We're in a frightful mess. You can't, there's no way out of this. And that's the reality of it. And of course, the whole thing is showing up in a debt trap, 36.5 trillion and counting. Foreign holders no longer buying it. I mean, there are some foreign demand, but that's sort of almost US entities by proxy, like the captive insurance industry in the Caymans, pension funds, global pension funds, who sort of try and, the actuaries tell them what to do. So, but other than that, there is no demand. That's why there's no funding, material funding going out along the yield curve. And that yield curve, incidentally, is going from negative, it's going to level, and it'll go positive, in my view. And I don't think it'll be very long before it does that. And then people will be saying, well, what does this mean? Well, I can tell you, it means the cost of funding is going up.